So when we started our conversation, you mentioned that if you need your PPC to be successful, it depends on a good product.
Mhm.
But can you recommend, or do you have a favorite category or something like that that you
Well,
can
it's probably
recommend
easier
us?
to tell you what I don't sell in than to tell you what I
Okay,
have sold in or where we're managing accounts or helping our clients right now. We
okay,
don't go into electronics. It is
okay,
oversaturated. There's too much manufacturing defects and customer support heavy, as well as a constant need for iterations of innovations every 6 months or less to stay up with markets. A very labor heavy intensive, lower profit, but high volume niche. So we don't really mess with that. Plus, you got to have at least $250,000 in capital now to go to market to really compete with some of the bigger brands like Anchor and stuff, who were one of the first brands ever to sell on Amazon all the way to $1 billion. And so there's a big, saturation niche in there, and it's very hard to carve that out. So we don't go there. We won't go into nutraceuticals or supplements. We owned a company that started on Amazon years ago and got very successful. We taught some of the largest brands like Dr. Tobias, which is one of the biggest brands out there now on Amazon. We started them when we got going with this gentleman years ago to help them establish that brand. He sold it for 8 figures, but it's a very heavy competitive niche. Again, it could be good profits, but the competition leads to less saturation and more to, let's call it, nefarious difficulties within the system, that you're constantly playing cat and mouse with other larger corporations who simply don't want you touching their market share.
okay,
And the last place we don't touch is clothing. While clothing can be very profitable, it is also, if done correctly with the branding, not like T-shirts. Okay, we're talking
yep,
about branded apparel or higher affinity apparel. It's a lot lower volume, which is even less volume than I'm willing to accept for the profitability. But it's also high returns. So yeah, Amazon has overcome some of those recently by giving you like a 7-day period to buy the product and try the product and then decide to send it back or pay for it after 7 days, which is cool. They're trying to overcome that problem, but it is still a big problem. So other than that, everything else is fair game. And we've sold in pretty much all those categories and have clients selling in all the various other categories that are out there.
so how do you like pick a product and then look for differentiating and adding value
Yeah.
in that product? How
Well,
do
the
you?
product has to be metric driven, right? So your question is
Okay,
almost a little bit emotional, but I'm going to reverse that and answer it from a statistical and an analytical. There's actually a
okay,
scientific method we developed called a green light spreadsheet, in which we
okay,
go through with 47 data points of data that all mathematically based on competition, volume, estimated sales, profitability, and all the necessary costs to move one unit from manufacturing all the way through customer acquisition to ensure profitability, while ensuring our ability to grow the PPC campaigns and overtake marketing share. So that process is a digital data-based analysis process. It's meant to keep you from paralysis or overthinking the product too much, but to look at the opportunities for competition versus saturation, profitability, market share potential, knowing exactly who the competitors are, down to, there are 7 competitors I'm going to go after. These three are these 3, and these 3 are that 3, and really understanding how you're going to overtake each segment of those different competitions in time, not all at once, but in time, that each of your metrics and your profile portfolio metrics within your seller health account can achieve greater than the bottom 3 people you're going to compete with in the market. And then you're going to approach the next 3 and eventually the next 3, and then you're going to be on top. That may take you 12 to 18 months to do it, but in time you will become the dominant tier brand. So it has to be products that have longevity. They're not usually seasonal. They usually have very great profit margins in them. They are smaller in size, but I don't necessarily care if they weigh more. I care more about the profitability. Remember, because people get hung up a lot on these perfect
yeah,
unicorn ideas of products. Well, it has to be this much profit and this much weight and this much this month. I'm actually looking for something very different, right? And when the data tells me, I test. We do what's called micro investing. So we will multiple test products. Like, for example, it's an investment strategy. I won't put 5 million into one company, but I'll put $1 million into 5 companies. Do you understand the difference?
yeah,
Because at this point, I'm now spreading my risk over multiple locations, and I'm putting a higher probability that one of those companies will take off. And when it takes off, it'll make back the profit or the cost I put into the other business plus profit, and it will overtake the other 4 that either didn't do very well. It's not that they didn't sell. One of them failed completely, or whatever, it just failed. And the other 3, sort of did okay at different levels. It's not that they didn't sell. or that they weren't necessarily selling. It may be selling a little bit less than the profitability I wanted them to, or they simply didn't reach the sales and velocity to overtake those different segments of customer competition. So it just forecast down the line that this is a product that you could get married to because it's making sales. It sort of looks profitable, but in actuality, it's going to fail you, okay, in the long run. So then I'm looking for those additional products that basically come and rise to the top. So I'm willing to test more of those product variations at the beginning in that first 90 days than my competition is usually willing to do, especially those who are going to go to market and compete with us at any time in the marketing phase, right? So because of that, I'm now opened up the engine's capability to help me determine exactly which size, shape, color variation, segment, node, niche, etc. is going to be the most dominant in that place. And I simply follow the data.
Interesting. So, Neil, you are the CEO of ASIN 360. Can you let us know what does ASIN 360 offers?
So ASIN 360 is the training within what we call our Voltage Business Builders. All right. So Business Builders is the mentoring and coaching. The ASIN 360 game plan is really the game plan in detail about what we've kind of been discussing around here today. How to approach the product correctly, know the products will be profitable, know the market and segmentation of your customer avatar very well, down to not just what they'll buy from you the first time, but what they will buy from you up to $1,000 over the next 12 months. And then understanding the scientific aspect of the marketing campaigns in PPC. We need to see certain metrics being hit, and it has nothing to do with how much I'm spending. It has to do with how much I'm acquiring. So that's an inverted relationship. I hear a lot of PPC people argue about how to lower your A cost and all this stuff. Well, if I'm not willing to lower my A cost to take up market share, are you really going to be able to compete with me? And the answer is probably no. You understand? Because I will go out and buy those customers away from you, and you will be arguing over the lower A cost. And I will say, I don't care if I'm spending 125%. I'm looking at the total advertising cost of sales and how much those customers are buying from me. You and I are already not competing with each other yet because we're not even competing on the same metrics. Does that make sense?
True.
So at this point, then I'm looking at the organic ranking and the keywords. I'm looking at the viability of my product rankings within the system as it's responding to this strategy, right? So we teach people how to understand what the engine actually wants, what it doesn't want. What people are saying over here is usually a lot of nonsense, and this is all we want to focus on over here. And then that sets them up for what I call my platinum principle, which is a part of the core foundation of the business mentoring. That's, we teach them as the e-commerce, and then we teach them Amazon FBA, and then we help them open multiple channels beyond Amazon FBA. So we're going beyond this, okay? And that is literally the expectation that the businesses are worth more in value when you sell them at any time during the business building phase. Can they cash flow positively? Absolutely. They can be great little profit machines. But money today is worth more than money tomorrow. Economics 101 of inflation, okay? If I can return 3 years of profits today, that money is worth more now than if I waited for the cash flow to come in over the next 3 years. You understand?
Yeah.
And if I know this system correctly, and I know I can compete in other niches and markets with products, I will just go do it again. Only I'll do it more capitalized, and I'll do it faster. And then I can repeat that process over and over again. And that's what Voltage teaches people to do within our game plan, how to repeat that process over and over again, to do what I've done for the last 9, almost 10 years, and what I will be doing for the next 10 years, growing multiple brands and testing and launching and executing and exiting.
Awesome. That's really interesting. I'm quickly going to take some questions that we have for you.
We might have a few.
So, can you summarize your take on a new launch?
Yeah.
In terms of PPC?
So you need to consider more time in your launch phase than you've probably heard to date. Most people will tell you, we have a 30 or 45-day launch process. They may even say we have a 7-day launch phase. Well, 8 years ago, we were doing 7-day launches because we could. That has extended now in the years later on up to 90 days. Okay, so our launch strategy and process in terms of the PPC is to over a 90-day turn in that product launch. We want to see certain metrics occur in that 90 days with our PPC launch. And when all those things are happening, then the engine inside Amazon is rewarding us with longer term product market saturation and distribution across Amazon's campaigns, not just its PPC, but its organic systems. Basically proving that I'm the better product than the products that currently exist, even if they have 3,000 reviews already and I have 0 when I go to market. So when we do this, we're basically telling the engine, not only are we a serious player, we're here to buy, we've got the profit you're looking for. And oh, by the way, we smell, look, taste, and feel better than the competitors that are currently there. And that means when we launch, we will look at a curve of purchasing, like a bell curve, that will exceed sometimes up to 150 to 200% ACoS during that time frame. Okay. So if you're looking for a launch that says, well, I'm only going to spend $100 or $1,000, you should understand I'm looking at $5,000, $10,000, $20,000 or more, because I'm going to look at the reciprocal ROI of that product launch in the next 90 days as you look at a quarter by quarter. And I'm going to say, is that returning my investment? Am I seeing organic growth? Am I seeing the market share overtake, the profitability continue? Because again, I'm in it for the longer game. And I'm not saying, because it says Facebook user, I don't have a person to say, I'm not saying that I'm not considering the profitability of the growth. I'm looking this at 12, 24, and 36 months. And if you're not, how are you going to compete with me in the market?
True. Got it.
Cool. I'm not sure I got the answer to that, and that may follow. There may be a follow-up question to that, but please ask if I didn't summarize that correctly for you.
All right, we've got another question.
Okay, so if the product is launched in June 2022, the product is ranked, indexed in all super relevant keywords, product ranked on page 1 also, but sales still are not coming. Why? Listing, image, and offer price are optimized. What is the reason for it not getting sales? That's a great question, right? There are about 100 things that pop into my head at this moment that are variables of why. Let's just try to get to the fundamentals, maybe down to the simple fundamentals of why that could be occurring. There are, you mentioned certain relevant keywords. Well, if it's relevant, is it a buying keyword would be my first question. If you are not acquiring sales, then that's a different problem. If you are acquiring sales from some measure, organic or PPC, but it's not, you're not making the money you think you should be making, that's a different problem. If you are getting, impressions, okay, you're getting traffic, but no sales, then your unit session percentage, what is known as your conversion rate, simply does not match up with the buyer intent. You've missed it. You might feel like you have a really great listing and all things look really good, but if you haven't acquired one sale since June 2022, and we're now into July coming up on August, you have a conversion issue. Now, again, that is an assessment of this very broad question to dig in, and you might want to ask a follow-up question here, Saeed. But the end result is conversions. If you've got impressions and you're getting traffic, but no one's buying, you simply have missed the conversion metrics of your listing. You have not correctly dialed in the language and the relevancy of that language to the buyer. And they're simply clicking off and buying someone else's product. That's the most fundamental answer, I believe, to your question.
Okay. So I've got a really interesting question for you, Neil.
Yeah. So how much minimum required for joining Voltage as a new investor? So in terms of, let's just set mentoring fees aside for a moment, because in full transparency, there are mentoring fees. I don't work for free, and you shouldn't either. So at the end of the day, I ask my builders to have a minimum of 25K in go-to-market capital. All right. So that 25K is going to assume this factor. You are brand new. You're a zero who's looking to go to be a hero in that 12 months with us. You have no assets. You have no experience in e-com. You're not currently selling, but you want to get started with a completely new brand. Okay. That's going to pull brand assets together, product and inventory, licenses, business LLC registrations, trademarks, and other brand defensible assets before you sell a single unit in the marketplace to show Amazon we're very serious, to show our competitors if they mess with us, we'll be able to deal with it. All right. Because we're not coming to just be a side hustle or a hobby business. We're coming to play games. All right. We're coming to play the game to win. And to win is to take over market share and exit that brand and niche in 24 months. So minimum is 25K because we're going to go to market pretty hard. We're going to test a number of those product variations. And then we're going to have a next tranche of money in that 25K that is going to be used for buying products that are winning, more inventory, because we don't want to stock out. All right. We don't want to stock out for something that's working if at all possible. It's a bad metric. Everybody understands stock outs as an issue. If you don't understand that as a new seller, here's an indicator. Don't stock out of FBA if at all possible. Okay. You might stock out of FBM, but you should understand, pro tip, it's different. Okay. So when you're getting that, just to be clear, that is going to be your go-to-market capital. What it takes, okay, in your cash flow plan after you launch, after your products are working and they're starting to sell, what does it take to get to the next level? How much capital is required? It's answered by the business. It'll be answered in the cash flow and sales of your business based on demand of sales. Okay. If you launch a product with us that takes off to 100 units a day, and you're now going to, have 1,000 units, you're going to have to order maybe 2 or 3 or 4,000 units. That's what it's going to take because you're selling now. Congratulations. But it's where a lot of people miss the wave, because I see a lot of sellers who get in and they get started and they don't have that next capital set aside. They don't have the next means, the network, the ability to get that through other people's money, OPM, or their own cash flow or whatnot. And they simply don't reach the wave. There is a wave on Amazon in the algo. And I don't know if anybody's ever talked about that on here, but when you follow that wave with the algo, it will reward you with marketing, distribution, and channels. And you have to be able to ride that wave when the time comes. Otherwise, you will find yourself losing in the market. You'll lose market share. The algo will penalize you at different levels within your seller account. Those you may have a completely green seller health account, but you're like, why am I not selling? Why am I not ranking? Why am I not taking more market share? Why are my campaigns not working? Why? And it's because you've been penalized by the algo, and you won't get that back. So hopefully that was an answer to that in terms of what you were asking with the question there, and why. It's more important to understand
This
why.
is exactly how I'm feeling right now. But I have to ask you, Neil,
Yes, sir.
that do you have any free stuff like blogs or case studies out there, maybe on your website?
I do have a podcast called the High Voltage Business Builders Podcast, where I share a lot of information with ecom. I give tips. I bring on some really great people. They have to have a minimum of $1 million a year in net profit business to be interviewed. And most of them are very high net worth individuals doing great things in big places in business. It's worth listening to. I also have a 3 free day series training in my emails. If you go to voltagedm.com, Voltage Digital Marketing, voltagedm.com, you will see the podcast media. You'll be able to sign up and get some of that free training. It's a 3-day live event that I just recently hosted that you can watch the replays on, which go through the 4 big topics, 5 of them technically, where I break it down in detail about the product analysis. I give you some spreadsheets. I kind of show you a little bit under the hood. And I encourage you to go check that out and, listen to some podcasts, check out the media and guest spots, and just get to know me a little bit more. I'd also encourage you to Google me or DuckDuckGo me or whatever search engine you use. Mainly because you'll find all of that information plus more. What you won't find, and why I encourage you, is to go listen to negative YouTube videos or blog sites talking about scams or any of the other crap that you might find out there, simply because it's not out there. It's not like I'm a super genius and Elon Musk here with a giga, Cray computer that's out there scrubbing the web. It's just not out there. And it really has to do with a testament to the Voltage business, my clients and the people that we do work with, as to ensuring the integrity of business and reputation, which is very important to me, which is why I choose everybody that works in my business.
All right. On this note, we're going to wrap this up. Thank you for the audience for being with us. And thank you, Neil Schwartz, for being our guest. We've had an amazing session with you. Thank you so much. Hope to see you again with this community. And see you all, guys, tomorrow, 10 p.m., with another session with industry experts on Amazon PPC. See you soon.